Hello and welcome to the weekly market update. We are going to highlight the key economic figures to come out this week and then move forward with going over some of the major charts of major currency pairs. But first, let's have a fast look about the developments of the coronavirus. So the total confirmed cases around the world rose above 7 million. The recovered cases are around 3.50 million and deaths crossed 400,000. Brazil has now the third highest death toll behind the United States and the United Kingdom. South Africa posted a record rise in cases for the past 24 hours after easing lockdown measures. Iran is facing also its second wave. Experts are worried about a second wave outbreak caused by riots since people are participating and these riots are not taking the needed precautions. On a positive note, the French government stated that the COVID-19 is under control now. Many countries will continue with their plans to ease restrictions on activity and life is almost back to normal. The CEO of AstraZeneca, the British pharma giant, will start providing, stated that the company will start providing vaccines in September if trials were successful. They are already producing before the final regulatory approval, and they are talking. They are stating around there would be around 2 billion doses of the vaccine. So we used earlier to talk about or discuss also the US-China tensions, but during the last week we had no major developments on this front, and market participants completely ignored the matter and focused on the reopening of business around the world. So now let's pinpoint the major economic events for the week. It's not very busy this week despite having the Federal Reserve monetary policy meeting on Wednesday. So first let's start with the events to come tomorrow. We have from let's highlight some of the key events that took place last week, especially on Thursday and Friday, which also had a major impact on the market. First, the European Central Bank increased its pandemic asset purchases by 600 billion euros. This also confirmed for investors that the European Central Bank will do whatever it takes to support the economy in the euro region. That was positive in the market and gave positive sentiment and lifted the risk appetite. Also, on the other hand, the US jobs report on Friday came well better than expected. There was expectations of that the economy has lost around 8 million jobs, but the figures came out showing that the economy created 2.509 million, and the unemployment rate fell to 13.3%, despite the talks that went on the weekend. The reports that stated there was some misclarifications, errors on the unemployment rate. Still, the positive sentiment remained in the market at the open today. So moving to the major economic events this week, on Tuesday we have the final reading of the first quarter GDP figures from the Eurozone, expectations of a contraction by 3.8, no change from the second reading, and the US job opening jolts at 5.375 million jobs, and the weekly oil stock by the American Petroleum Institute. On Wednesday, we start early with inflation figures from China, so the consumer price index and producer price index, CPI year-on-year expectations of 2.7% versus prior reading of 3.3%, and the producer price index dropped to 3.3% versus prior drop to 3.1%. Moving to the United States, ahead of the United States session, ahead of American session of the consumer price index out of the United States, the month-to-month reading expectations that prices fell by 0.1%, less than the previous drop. Also, the U.S. Energy Information Administration will report the weekly crude oil inventories. There are expectations of a buildup of 3.038 million barrels. This is for the weekly crude oil inventories. And the major event of the week, or the most important event of the week, the Federal Reserve Open Market Committee meeting, which will take place, which will start on Tuesday and it will end on Wednesday. The Fed will also release, there are no expectations of any change in policy. Interest rates are expected to remain at their low levels. Also, the Fed will release the projections for inflation and economic growth, and the more important, a breakdown of FOMC members' interest rate forecasts. So each member will have his own forecast on interest rates for the coming years. So this is very important from the Federal Reserve on Wednesday. After the decision, the Federal Reserve Chairman, Mr. Jerome Powell, will also communicate the decision to the public. So this is for Wednesday. It's a very important day in terms of economic events. Moving to Thursday, we have the Eurogroup meeting, and then the weekly jobless claims from the United States, expectations of 1.55 million claims versus 1.877 million claims prior. So also expectations of a drop in terms of jobless claims, so a drop in terms of the trend in jobless claims, which reached almost more than 40 million due to the coronavirus pandemic. So moving to Friday, it's also a bit busy from the United Kingdom. We have a series of economic events or economic indicators to be released. Among them, the GDP month over month for May, expectations of a contraction of 18.7%. Also, the industrial production and manufacturing production, a significant drawback by around 15% for each. And then the trade balance, a slight change, 11.62 billion deficit versus 12.51 billion deficit previously. From the Eurozone, the industrial production month over month also for April, a contraction of 20%, showing the impact of the coronavirus, of course, on the industrial production activity. And from the United States, the Michigan consumer sentiment for June, a slight rise in sentiment towards 75 versus previous reading of 72.3. And we end the week with a U.S. Baker Hughes oil recount, which would give us a hint whether top U.S. producers are back to their normal activity following a rise in oil prices. So this is mainly the top economic events to come for the week. We'll move to the MetaTrader 4 platform to talk about, to have some readings on the charts of major currency pairs. So first we are going to start with the dollar index, which was falling sharply in the past couple of days. We had an 8-day losing streak, a 7-day losing streak, and the jobs report on Friday snapped this losing streak. We saw the dollar rebounding a little bit, but today, unfortunately, couldn't hold the gains and dropped again towards 96.70. So this is for the dollar index on the daily chart. If we're going to look for, or to highlight the major support and resistance levels, in order to see a full comeback in the dollar, we need to break above the previous low of 98.34, which was the first low incurred during the pandemic, following the surge that took place earlier in March. So we need to break above 98.34, which is still almost 1.6 points away for the dollar index in order to see some positivity on the dollar index. And in terms of major support, we have to look out for the previous low at 94.59. So we could continue trading here and sideways between these two key levels. We have an area of around 400 points. So we need like really good factors or catalysts in order to move the market outside of these two key levels. If we put some of the major indicators, we can see that the market is well away from the 100 and 200-day exponential moving average. The Bollinger Bands are really wide, so we could see some move, some sideways move, maybe sideways move down. And also the RSI is still below the 30 oversold level. So this is for the dollar index. Generally, it's in a downtrend. We have a series of lower lows, a series of lower highs. We are trading below the 100 and 200-day exponential moving average, and we are well below the recent lows. So this is for the dollar index. If we go for the hourly chart, we can see some slight pullbacks here. So maybe we had a little bit of a retracement during today towards the 50%. Towards 50% Fibonacci retracement, and now we are currently at 23.6. In order to, if you're short on the dollar index, you better look for some targets by setting the Fibonacci extension tool. So this is for the dollar index. To recap, we have two key levels to watch out for. One of them is 98.34 in terms of resistance, and in terms of support, 94.55. So in case you're trading the dollar index, you have to watch out for these two levels for any key moves. We have a little bit of a minor support here. It comes around 95, 90, 96 levels, which is almost close to the level that we are currently trading at. So this is for a dollar index. Let's go for the euro dollar. So for the euro dollar also, we had it's almost the completely inverse the dollar index chart. We had a very steep move up, especially after the ECB announced and the ECB meeting on Thursday. So we had a huge rally. The euro dollar rose to its highest level since early March. So this is for the daily chart. Also, if we can apply 100 and 200-hour exponential moving average, we can see that the market is well above these two key moving averages. So maybe we could expect some slight correction or to close the gap between the price and the moving averages. So this is for the moving averages. Also, we can see that the Bollinger Bands are still very wide, and the RSI is above the oversold, above the overbought, in the overbought territory, trading near 75. So it's majorly bullish for the euro dollar. We have to look out for support in terms of any move down. The support could come in at 1230 and 1145, which were the previous resistance levels. Now they turn to be support, and the key major resistance level comes in at 1459, which was the highest almost this year. So these are the key levels if you're trading the euro dollar. So we have a minor support near Friday's high of 1383, a minor resistance near 1383, and again at 1495, and also minor support at 1230 and 1145. So these are the key levels if you are trading the euro you have to watch out for. Moving, let's go highlight some the moves on the hourly chart. Here we can see also it's clear that we are having a series of higher highs and higher lows in the euro dollar. A little bit of a drawback during the recent move, but still we are trading above, maybe above the trend line that has been formed using the recent lows. So since May 22nd, we are trading above this trend line. Any break below this trend line could trigger some bigger correction maybe. So here we are trading, this is key level for the hourly chart at 1260. Any move below it could trigger some drop towards 1165, 1140, the level that we highlighted on the daily chart. So this is for the euro dollar. Moving to the pound. Also, the pound had a pretty good week. It closed at its highest level since also the beginning, the drop that took place in the beginning of March. So this is for the weekly chart. If we have a closer look, we can see that the pound broke above the resistance that was holding the move up following the pandemic outbreak. So this is a key level or pivot point for the pound dollar, 126.40. And in terms of support, you have to look up for the previous resistance at 24.80, and also you can put the Fibonacci retracement. So maybe the previous support, the 24.80, it's always coinciding with the 38.2 retracement. Also, you can look out for some support near the 61.8 retracement, which comes in at 23.20. This is in terms of a drop or a drawback in the pound dollar if you're trading it. And in terms of resistance, we have the previous the resistance that was obvious on Friday, which was the previous support in early March. So this is for the pound dollar. Also, we have it is almost around the 76.4% level, which is around 27.80. So this area could have major impact on the price and act as a resistance area between 27.30 and 27.80. If you are trading the pound, you have to watch out for these key levels. Now let's add the moving averages and the RSI. You can see that the Bollinger Bands are widening from each other or are diverging, but still they aren't as bad as the euro dollar or the pound or the dollar index. So maybe there could be still some room for further movement. Also, the price is trading above the 100 and 200-day exponential moving average, which capped the price movements in early April. So this is for the pound. Watch out for any break below the 100 and 200-day exponential moving average for any move down. So this is for the pound dollar. Moving towards the dollar yen. If you go for the weekly chart, we had a very positive week last week. It was very positive for the pair, especially as investors rushed away from or ran away from safety and went towards more riskier currencies such as the euro, pound, and commodity currencies, and dumped the Japanese yen. So the pair moved almost towards 110, 109.85. If you can have a closer look on the daily chart, you can see here it was like a clear reversal movement, and the neckline was around 108 level, 107.70. So this is a key level if you're trading the dollar yen. You have to watch out for any move back below 108, which coincides with the neckline, and 100 and 200-day exponential moving average. And from the upside, you have to watch out for resistance near the previous high at 111.73, and if the pair succeeded in breaking below 108.9, we could look out for some support near the levels of 107, which also was the support when the prices were consolidating in this tight range during the second half of May. So this is for the dollar yen. If you're trading the dollar yen, watch out for 108 level. Any break below 108 level could signal some further weakness to the pair, dropping to 107. Else, we could see some positivity, and maybe with some catalyst in the markets, the pair could make some additional gains. This is for the dollar yen. Moving towards commodity currencies. Commodity currencies had a pretty good rally the past couple of weeks, especially the Australian dollar. It was benefiting from things going back to normal in China, and also from higher commodity prices. So you can see a significant appreciation of the Australian dollar last week, and found some resistance near its highest level since December 2012 or early January. So this was a key level for the Australian dollar. Some investors will start looking for retracement or a slight correction in the pair following this sharp move. Let's see what indicators have to say. So here we have the price is a bit far from the 100 and 200-day exponential moving average. The RSI is well in the overbought territory near 78.80, and we're starting to seeing some small body candles here, which could signal that the momentum is fading a little bit. So this is for the Australian dollar. It's being very sensitive to any risk events happening. So on risk-on events, the Australian dollar is benefiting from risk-on mood, and in risk-off mood, we are seeing some drawbacks in the Australian dollar against the United States dollar. For some of the key levels that you have to highlight would be, since we are far away from the previous levels, we have to find some levels using the Fibonacci retracement. So if we are expecting some correction for the whole move, we could have some major support near the 23.6 level, which was also the previous resistance in late February, early March, which comes in at 66.58. And if we're just looking for a correction of the last move higher, so also we can, the last swing higher, we can look for the 50% retracement, 138.2% retracement, so somewhere between 68.20 and 67.80. So this could be this could provide some support for the pair if you are trading the Australian dollar against the United States dollar. So we could have some major support near 66.58, which is very far away from what we are trading, and some minor support could come in at 68.20 and 67.80 in terms of if we can see some slight correction towards the move. So maybe here we can see some a little bit of support and resistance here near the previous high of 70. 70 is also a psychological level. So here between this area, between the previous two highs of late 2019, 70.80 and 70.30, we could find some resistance inside this area. So these are the key resistance levels for the Australian dollar. These are the key support levels. So we're trading currently in between. So this is for the Australian dollar. Moving towards the Canadian dollar, which also gained a lot against the United States dollar, we can see that the pair almost lost all the gains earned following the pandemic. This is the USD CAD, and we could find some support near this the support zone here around almost 33.30, and additional support could come in at the previous low here near 31.92. So these are the two key levels if you're trading the USD CAD in terms of support, and in terms of resistance we have 35.66 in terms if we are expecting a little bit of a correction for the last move lower, we could expect some resistance near 35.66. If we go So here, if we use the Fibonacci retracement for the latest move lower, you can see that this price comes in between the 23.6 and 38.2, which usually is the first or the first levels of retracement that we can see in trading. So it's somewhere between 35 and 35.60 in terms of resistance if you're trading the USD against the CAD. So these are the key levels: 35 to 35.70, and from the bottom 33.30 and 31.90. These are the key levels for the USD CAD. Moving to the New Zealand dollar against the US dollar. Also a sharp move. As we said, commodity currencies benefited from the risk appetite recently, so we can see the New Zealand dollar almost recovered from all the gains incurred from the pandemic, and we are moving. We were able to step above or to move above 76.4, which was also coinciding with the previous resistance zone. So in terms of any support for any drawback, you have to look for support near 64.37 for the New Zealand dollar, and in terms of resistance, we could find some resistance between 66.30. So this is the area that we are trading in between. Currently, we are in the middle. At 65.30, the resistance could come in at 66.30 and support at 64.37. It was a previous resistance which could turn into a support if the market moves down, and on the contrary, this was also a resistance here which could turn into a minor or interim resistance level at 66.30 before the major resistance kicks in at 67.35. So these are the key levels if you are trading the New Zealand dollar against the US dollar. Let's see what the moving averages are telling us. The market is very, the bands are very far away from each other. The price is trading above the 100 and 200-day exponential moving average, and the RSI is also around the 80 level, which is almost overbought. So this is for the New Zealand dollar. We are in an uptrend. The market is moving higher. We have a series of higher lows and higher highs. The market is a little bit overbought as per the RSI 14 indicator, but still we can see maybe some consolidation move and then a leg higher. It depends whether the current risk mood prevails in the market. So this is for the New Zealand dollar. Moving towards gold. Gold was trading inside a consolidation zone recently, so we're trading inside this consolidation zone between almost 1670 and its highest levels in a while, 1764. So on the bigger picture, we have this consolidation zone here. We have to respect the boundaries if we are trading gold. So 1659 should act as a key resistance for gold. Also 1644, which was the previous high here, 1643. So this area could provide good support for gold prices in terms if we saw further collapse in price, and 1764, and also the recent high 1744 could turn as key resistance. So on the bigger picture, you have to look out for these levels if you're trading gold: 1744 and 1764, and on the support zone 1659 and 1642. If we set the moving averages, we can see that the market found a little bit of support near the 100-day exponential moving average last week, and bounced off these lows and trading and approaching the 20-day moving average, which is the middle band of the Bollinger Band. So we're trading currently between the middle band and the lower band. The RSI is almost near a neutral level around 44, so nothing much to tell us from the RSI. Let's look for the hourly chart. We can see here, I'm going to remove these indicators, and we have to draw this trend line here. So watch out for a break above this trend line. If the market trades above this trend line, maybe we could see a higher move towards 17, 18. So we're trading here inside this channel. Watch out for the upper side of the channel or this downside trend line, which is combining the previous or recent highs. So any break above 1700 could lead us towards a move towards 1721. This is on the upper side. So in addition to the previous 1744 and 1765 levels, on the bigger picture, we have on the smaller picture resistance zone near 1720, and here's a pivot point near 1688. and support zone, interim support zone near 1670. So these are the key levels if you are trading gold. Currently we are having a bullish engulfing candle. It's a clear bullish engulfing candle, erasing all losses incurred during the past 3 hours. This is for dollar. Gold, if you are trading also silver, after this move higher, we had a drawback in silver prices, and the prices almost found support near the trend line, combining the previous lows. So any break below this trend line could lead to a move lower to the recent levels where the prices were consolidating. So watch out for any break below these levels, and if this trend line hold, we could retest the prior highs of 1834. So this is a key resistance for silver. We have a minor resistance near 1780, a minor support at 1718, and a major support again at 1665. So these are the key levels if you are trading silver, but also make sure that you are keeping up with this trend line and checking how the price is dealing with this trend line. So this is for silver. Moving towards oil, and then we'll finalize with the Dow Jones. So oil price, we have on the, it's clear on the daily chart. We started the day higher, especially after OPEC Plus agreed to extend the cuts to late July, 9.6 million barrels cuts to late July. However, the markets rebounded following the news, since the market was almost overpriced and expecting more from OPEC Plus, so prices started moving lower. We're currently trading near 38.04. So if we are having a correction for the latest move, we are currently at the 23.6 level. Watch out for any dip below the 61.8, which comes in at 34.50, which is the price where we were in a consolidation mode for around 5-6 days. So watch out for these levels, 34.46, and from the upside, the previous high of 40.40. Currently we are trading in almost near 38 level at around the 23.6% of the recent move higher. So if we are in a correction mode, you have to look out for the 23.6 and 38.2% retracement, which are between the 37 and $38 per barrel in terms of minor support for oil. So these are the key levels if you are trading oil. I'm gonna go for the hourly chart and see what the moving averages are showing. So the prices are used to find support earlier from the 100 and 200 hour exponential moving average. Currently we are approaching again the 100-hour exponential moving average. If the price was able to cross below it, maybe we could retest the 36.24 and witness some consolidation move, and then have a leg either lower or higher. So we have here the consolidation zone that could lead us for the next move. So this is for the for oil prices if you are trading oil. Moving to the Dow Jones, which was skyrocketing last week. Following the jobs report last week, we saw a huge rally for the Dow Jones, a continuation for the rally that started in mid-May. So in terms of support, if the market is going to go down, we found some support towards today's low, which was also a key resistance near late February. So 26,960 is a key level. If you are trading Dow Jones, you have to watch out for any break below this level. And in terms of resistance, we are looking for the 28,060 in terms of key resistance. So we have a 1,000 points that we could be trading in during this week. And if we are expecting a slight correction in the market for the recent move, at least that took place on Friday, so 26,305 could provide some minor support to the market ahead of the major support that could come in at 25,600. So these are the key levels if you are trading the Dow Jones. In terms of resistance, you have to look out for 28 level, 28,060, and in terms of support, we have 26,305, 26,300, and 25,600, and the 26,160 is a key pivot point for the Dow Jones. So watch out for these levels if you are trading the Dow Jones. So let's see the hourly chart. You can see that the price is very far from the 100 and 200 very far from the 200, 100, and 200-hour exponential moving average. You have here also a slight divergence, but still it's not confirmed yet. We have a higher RSI at a certain price, and now we have a higher price with a lower RSI. So also, if you are looking for intraday trades, you can watch out for this divergence and the break of a support of 27,000. So this is for the Dow Jones on the hourly charts. So this is all for today. If you have any questions, please write them down so we can answer them. I would just like to remind you that all the information, opinions, and analysis mentioned in this webinar are only for educational purposes and shouldn't be taken as signal to buy or to sell a certain financial instrument. So if you have any questions, please write them down. I can see some hands up, but I can't see questions yet. To recap on the fundamental front, on Wednesday, the Federal Reserve will have a monetary policy meeting. The Federal Open Market Committee will be deciding on the monetary policy. There are no expectations for any change, and also the FOMC will be providing the economic projections, and also FOMC members will be also showing their forecasts for interest rates for the coming years. I'd just like to remind you that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. So on Wednesday, the Federal Reserve will have a monetary policy meeting. We should look out for any hints from Federal Reserve Chairman Powell on whether the Federal Reserve is considering less easing, especially as the economy starts to recover and the stock market starts to recover from the earlier losses, signaling that the economy could be performing better. So these are the highlights that you should watch out for on Wednesday. Okay, perfect. So this is all for today. If you have any questions, please write an email to webinar@icm.com or support@icm.com, and we'll be glad to support you. Thanks for attending. On Wednesday, we will be holding an educational webinar on how to form your trading plan and how to control your risks while trading Forex. So this is all for today. Thank you for joining.